Good morning, traders. This is Alla on August 14th. In this video, I would like to show you the importance of Fibonacci levels, the importance of reversal zones. Every single one of these levels is proprietary Fibonacci level you can install on any instrument, any time frame, any platform you choose to trade. This is what we dealt with on S&P last week. S&P was frozen in correction between these two levels. These levels were identified week prior. Take a look on trend inception and very powerful place to short from. This is key day trading chart. If I convert this chart to 5 minute, take a look at the accuracy of the method. This is 5 minute chart last week. As you can see very clearly, identical area, identical rules, different risk management than hourly. If I convert this chart to 15 minute, it will remain the same. Take a look. Identical area, identical levels. Flawless place to short from, only if rules are met, not the place to buy into. If I convert this chart to 1 minute, take a look. This is 1 minute chart, identical area last week. Identical Fibonacci levels identified on hourly chart apply to any chart you choose to trade. This was the place to short from, not the place to buy, no matter what chart you trade. This week we're dealing with drastically different plays. This is where S&P is now, trend inception. Not the place to short into, the place to buy from. These levels had been identified well before trading room open on Monday morning. And as we discussed the entire yesterday morning, this is a place to short from. Key Fibonacci resistance. Where selling pressure picked up the steam as expected. And where did buyers stepped in from? No surprise. Trend inception reversal zone. Take a look on this chart and let's discuss what's happening right now on S&P. If I convert this chart to 1 minute, formula remains the same. Take a look. This is yesterday's market. This is where price sold off from, and this is where Fibonacci reversal zone keep finding buyers. Take a look at this market this morning at the open and how Fibonacci levels identified days in advance keep you out of trouble. We're in the middle of nowhere. Fibonacci resistance is a problem. Buyers are weak. Buying into Fibonacci resistance identified days in advance is not a smart thing to do, no matter what chart you trade. If I convert this exact same chart to 5 minute, take a look. Accuracy remains the same. Buy at trend inception, buy at reversal zone, short at Fibonacci resistance. Trend inception is a key. That's the power of the method. Buyers are weak, no matter what chart you trade. This morning, buyers remain fully in charge. The only problem, this Fibonacci resistance, stopping the buyers the entire open. As you're witnessing to the tick the accuracy of the method on day trading chart, as this Fibonacci resistance keeps trader out of trouble. Only Fibonacci will give you this much accuracy. Only Fibonacci is the natural predictive tool in the market. The power of the method in its accuracy. The power of the method in trend inception. The power of the method showing you. Do not ever enter into Fibonacci resistance. Trade from Fibonacci levels, not into Fibonacci levels. If price will skyrocket and give us a gift, this is a place to short from. This is not the place to enter into. That's a market 30 minutes as expected, as discussed with students before market open. And this is the power of the method. Buy as low as possible. Sell as high as possible. This week, buyers are weak. Sell-off started at trend inception last week. Sell as high as possible, not as low as possible. Absolutely no shorts are present yet. None. Identical formula you are seeing in front of you on day trading charts, playing out on multiple instruments, multiple time frames, at trend inception levels. Take a look where S&P is now. This was trend inception on S&P. Your investment decisions, 1800 number. Identified years in advance. Present in the room since 2011. This is trend exhaustion levels. Does that look familiar? This is where S&P sold off from last week. As S&P reminding you right now, on day trading chart, the tick, the reason I'm doing this video, not the place to buy, my goodness. What a flawless Fibonacci puzzle market is. And that's the accuracy of the method. You can trade on any instrument you choose. And this is the reason trading room is open. Market in a whole lot of pain. Clear on that? Level identified since yesterday morning, in a play right now. Can be in a play for days and weeks to come. Rules are met. Reapply the levels. All the rules in classes on Monday and Friday. And that's identical formula on gold. If you're witnessing the power of this level on 1 minute chart S&P, this is a reminder where gold sold off from. Your investment decisions. This is also the reminder of trend inception on gold in 2016. Last month, gold danced in brutal correction, testing traders to the core. Gold is oversold, but there is absolutely no reason to buy gold yet. When rules are met, only then you can buy gold. Identical formula on gold, identical level. Drastically different mentality, drastically different risk management, drastically different hold time. And this is oil, as you will witness tomorrow morning during oil news. This is trend inception on oil, where buyers stepped in from. This is where oil struggled for over a year. Famous 55 level. Gold overbought, selling off as expected, very close from reversal zone. What is the key institutional support on gold, on oil this level? Not the place to short near. 5 weeks in a row, oil keeps finding buyers. Tomorrow morning I will convert day trading chart of oil to 1-minute chart, so you can see instantly the accuracy of these levels well before the news. Do you remember incredibly bearish news on oil? August 1st, August 2nd, what did I say? Institutional support, who cares about bearish news? Rules are met, take long. Buyers stepped in with vengeance despite extremely bearish news. Until this Fibonacci reversal zone. Absolutely no surprise where oil sold off from. And this is where buyers keep coming on oil at trend inception. Only when rules are met, you can take a trade. Levels present in front of you for months. I can convert and will convert tomorrow to 1-minute chart. Absolutely no surprise what oil doing this morning. On oil, this Fibonacci level is key support. On S&P, it is key resistance. S&P remains in brutal correction. S&P remains in a whole lot of pain, no matter what chart you trade. Every single Fibonacci level remains the same. What you will choose to trade it on, absolutely up to you. Here is bonds. This is a chart on bonds present in the trading room for years. This is where bonds sold off from. Trend inception reversal zone. As I mentioned, 2 bill gross. Not the place to buy, the place to short from. This is where bonds are now. What is causing biggest problem on bonds? Absolutely no surprise. This Fibonacci resistance. Bonds in massive correction. If you know the rules, you know where to buy from, not the place to short into. Bonds oversold, bonds in massive bullish correction. Identical level caused massive sell-off on bonds this year, as you're witnessing on S&P right now. No matter what chart you trade. This been the market open, ladies and gentlemen. 30 minutes war zone on any chart. Here's 5. Look at that. Ouch. Not the place to buy. Market dancing in correction 80+% of the time. Broker printing money. If you know Fibonacci levels, you stay out of trouble. You're not participating in fluff. You're not participating in chop. Nasty, nasty markets. Clear on that? Every single chart, every single instrument, different time frame. What you choose to trade, absolutely up to you. Here's 15. My goodness, it's all the same. We're in the middle of the trend. Worst place for day trader to be. Identical concept as you saw on bonds, on gold, on oil. Sell at key Fibonacci resistance. Buy at trend inception. Stay out of corrections. Stay out of the fluff. Do not buy into Fibonacci resistance. Do not break the most important rule you learn in the course. We are in the middle of nowhere. Market in a whole lot of pain. Market collapsing to here, it's a gift. Buy at trend inception. just like gold, just like oil, just like bonds. Only if rules are met. And here's identical strategy on euro. This is where euro sold off from. My goodness, poor euro. Trend inception, reversal zone. This is where euro struggled for months. Key, trend, reversal. Absolutely not the place to buy. Key Fibonacci resistance, massive fluff. Buyers on euro are weak. And that's in a play in front of you on S&P right now, on every single chart you trade. Clear on that? And that's the power of the method, and that's the reason hedge fund managers, hedge fund traders take in the course. What you trade, absolutely up to you. Identical Fibonacci levels apply to any instrument, any time frame, any platform. And that's very important. VIX. Hedge fund manager in the course trades. Key Fibonacci support, bright pink line. No surprise where buyers coming from. We are in the middle of historical formations. I hope you are ready, as volatility will pick up the steam. Key Fibonacci support on VIX is exact same place where S&P sold off from yesterday, on any time frame you choose to trade. You don't need to wait for weeks, months and years to see the accuracy of the method. You see it instantly in day trading room. Every day, every time, on any instrument you choose to trade. Even Apple. This is your investment decisions. This was Apple the entire 2018. If you browse my videos and announcements before Apple earnings, what did I say? This is key Fibonacci support, not the place to short. Rules are met, take a trade. This was trend inception in 2017. Apple exhausted now. Not the place to buy. Identical formula you saw on oil, you saw on bonds. As S&P remains in a whole lot of pain, in exact same level where Apple staged massive correction from for almost 6 months. Key Fibonacci resistance. Apple blasted through this level. S&P cannot. S&P is selling off. What a beautiful place to be if you know what not to enter into. If you make an effort and you respect the most important rule you learn in the course, day one. No surprise. Identical formula across the board. On every single instrument, on every single time frame. What you choose to trade, absolutely up to you. Market remains in massive correction and massive chop. Fibonacci keeps you out of trouble once again. Price collapsing here. This is heavenly place for day trader, for investor to be. Rules are met, take a trade. Buy at trend inception, not into Fibonacci resistance. Doesn't matter if you trade euro, doesn't matter if you trade pound, doesn't matter if you trade at Tesla, gold, oil. Every single price action pattern remains the same. Only difference, risk management and trader psychology. So if you would like to join us in Fibonacci Mastery course, please review the information on the website under Learning Courses, and I look forward to working with you. So if you remember this first week in August, just remember what S&P had done on day trading chart. Just remember where S&P is now on monthly chart. Be prepared. Don't complain about low volatility. This bearish correction is not gonna remain forever. Eventually, it will do exactly what it did on day trading chart. Correction lasted on day trading chart a week, and then market did this. No surprise. You better be ready. If you have any questions, please do not hesitate to contact me 925-257-4298 or info@fibinstitute.com.